Hey guys, Akil Stokes here, Forex trader, trading coach, and co-founder of Tier1Trading.com, and welcome back to another episode of The Trading Edge, your weekly look around the markets. If you're a consistent follower of this video, one of the cool things about what we do is it's not just sharing trading ideas each and every week, but it's sharing educational lessons and kind of a realistic look at what the journey of being a trader looks like. And over the past month or so, we've had really the full swing of, I don't want to call them trading emotions, but trading scenarios that you can expect to go through. We've come off of an extremely hot streak, and then we followed that by a week of doom. And then we followed up last week's kind of rough week in the market with another hot streak today, or this week, I should say. And we came into Thursday calling it pattern day. And what's interesting about the markets is this. Just as our trading has been kind of going through the swings of ups and downs, so have the markets. We've seen very directional movement every time something, I guess, optimistic about Corona comes out, whether it's countries or states reopening or something, or maybe some monetary policy type of deal that has to do with it. And then we've also seen kind of dead periods where after that initial optimism, that initial reaction, the market kind of retraces and goes into a holding pattern. And that's made it very difficult for many traders out there, not just speaking about traders on the platform, but also traders that I run into or talk to on a regular basis on social media. And what's cool about being a well-rounded trader, you don't have to be this way, but we talk to our traders a lot about diversifying your portfolio, diversifying your strategies, is that if you have different ways to attack the market, you could take advantage of any period in the market, right? You can take advantage of the very directional periods. You can also take advantage of the consolidative periods. And this week we saw a lot of consolidation, and specifically heading into Thursday, we were all excited, or I was all excited personally, because we called it pattern day. It was a day in the market where there were a lot of advanced patterns setting up. And it was going to be a do or die day. It was going to be a day where, if all of these patterns completed, it was about 4 or 5 of them, it could end very well. It could end very poorly. It could end somewhere in the middle. And we just didn't know. And luckily, I don't want to say luckily because it's probabilities, but we stuck to the plan. We didn't bail on pattern trades after having a rough week with them the week before. And because of that, many of us, including myself, were able to significantly benefit off of Thursday's action. And it's cool to see the younger traders just go through these times, go through the period of kind of good to bad, force themselves to stick to the plan, do what they're supposed to do, and be financially rewarded for that. It's cool, it's uplifting, it helps build that belief, and it really gets that cycle going, belief, action, results, where the more you believe in yourself and what you're doing, the more likely you are to continue to do the right actions and not self-sabotage. And of course, the more you continue to do the right actions, the more you exploit your edge, the more you make use of your probabilities in the market, and you see the results that you want. And of course, the more you see the results, the belief gets stronger and the whole cycle gets stronger. So it was a very great day, obviously from a financial standpoint, but also from a psychological one as well. So hats off to all you traders on the platform that took advantage of that. Only a few pairs to look at this week. I really don't have much interest in the market, but this is a weekly video. I'm trying to stay consistent with you, so I want to share with you something, but it's not going to be all too much, so plan on a quick one. Lastly, before we get going, for you guys that are on the platform, if you head over to our social groups, head to the Daily Chore group. We're looking to do a meetup so we can discuss some ideas and kind of whip around about what people have been trying and share some ideas on different ways to optimize that strategy. Right now, the plan is looking at probably a meetup sometime next Friday or Saturday, but do me a favor, there's a post in there. Just shoot your availability into the post and we'll set something up to meet up and discuss next week. Of course, it will be recorded, so if you can't make it live, I know we're dealing with people from hundreds of countries from around the world, so we're never going to agree on time. But if you can't make it live, we'll post a recording that you can review it later. All right, let's dig into the charts. So the euro was one of those pairs this week, or the euro in general is one of those currencies this week that had a very strong start to the week with some initial optimism about the reopening and whatnot. And we saw some very bullish movement on the pair. That bullish movement really broke us out of the mini range of consolidation that we've been fighting in for the last, 3 months or so. I didn't personally get an opportunity to buy it up to this level, but this was the next level of structure that we were looking for. Either a counter trend trading opportunity, a chance to short if we got to that level of structure, or if we had the opportunity, a chance to buy it in anticipation of that structure. And again, that buying opportunity would have been looking for a violation of these previous structure highs right here and a chance to trade it up to that level. Maybe there was a day trading chance for some of you guys on this candle right here. For me, there wasn't. So what I'm looking for heading into the week is going to be a selling opportunity, another counter trend trading opportunity here, and a chance to play a little bit of relief. So we're going to go down to the 4-hour time frame, and you can see that there are a few things happening. Now, first and foremost, we closed the week with a lower low, lower close, right? So if you're an aggressive trader, actually, we didn't close the week on lower, low, lower close. I take that back. The previous candle was a lower, low, lower close, where price is just sitting at that same level. So if you're an aggressive trader that maybe missed this opportunity, this would be a chance to get short at market. I'm not that optimistic with this. I want to be a little bit more cautious. So I wouldn't honestly be looking for any type of short opportunities unless we break this little area of consolidation right here. And that could be a few ways. We can break immediately. We can bounce off there and get some type of small head and shoulders action on the lower time frame. Doesn't really matter. What I would like to see is a break of that level. And if we could break that level, I'm looking for a move back down to 110.30s, all the way back down to about 110 even. So it's not the greatest opportunity in the world. There's not a lot of movement there. So it might be more of a lower time frame type of deal, hourly chart down to your 5-minute and your 5 range. But like I said, there isn't too much interest I have in the market this week. And this is one of the shorter term opportunities that I do have on my radar. Now, something a lot longer term, right, going from the short term to the long term, is going to be what we're seeing here on the pound yen. And what we're looking for in the pound yen is going to be a potential bearish cipher pattern. I'm pretty sure we've talked about this here on the weekend video a few weeks ago. This is certainly something we've been stalking here in the live room and on the platform for, really since mid-May, I would say. But we are inching closer and closer, just like euro dollar. We are currently trading at previous structure. If we can break that structure and continue to the high side, there's going to be another short opportunity in the form of a cipher pattern right at 134.16. And I'll show you what it's going to look like. It's going to look like this. Our initial X to A, swing high to swing low, is going to be here. Our first retracement, that A to B, is going to be right there. Our extension, that B to C, is going to be down here to our lows at 129.20s. And then our decompletion would be right at this 786, again, 134.16. Now remember, the decompletion, although it is set to complete at a very specific level, that 786 Fibonacci, doesn't mean that price is going to turn around right at that level. So what you can do is you can draw out a zone if you're a non-aggressive trader, saying your zone, your kill zone, your potential reversal zone starts at the 786 and travels all the way up to the A leg here, or the X leg here, excuse me. So if you're someone that can't enter aggressively, this is where you would look for your specific reason for entry here on the short, here for a short on pound yen. What's interesting is that we just completed a head and shoulders as well. If you can draw it out a little bit right here, left shoulder, boom, head, boom, right shoulder. If you drew a horizontal neckline, you're trading at the horizontal neckline right now. If you're using a slanting neckline, your neckline looks something like this. And your projection for targets for that head and shoulders is most likely going to be in a very similar area to where that cipher is set to complete at. So if you're doing a 1-to-1 measured move, yep, you can see it's going to be right below that 786. If we add some Fibonacci confluence, swing low to swing high and back down, you're going to see a 1618 right above that level as well. Even if we just do a range break, I'm curious what a range break would be. That might be a little bit longer. Again, don't mind me on this. The neckline was broken right here. Yeah, that's going to be a little bit taller, so that won't get the job done. But same thing, a good area, because you got to think those who are looking at the head and shoulders probably looking to take some profits as we roll up into these levels as well. So decent opportunity for the cipher. By the way, speaking of cipher, there's a podcast coming out. We had a meetup the other day on with our traders. Just, we haven't seen each other in a while. I know London traders have a lot of in-person meetups, but the pandemic has kind of halted that. But it was cool because myself and Darren and OG and Charles, the guys from the States here, were able to join as well. We talked a little bit about the cipher, and I think I was going to share a podcast. Yeah, so it's scheduled for June 7th, which is going to be next weekend, so a week from today, basically, where it shares a story about, it's called Discovering the Cipher Pattern and Human Behavior. We talk a lot about human behavior in the market and how the history of human behavior is basically technical analysis is the physical, if you can say, representation of human behavior in the market. And if you can understand human behavioral patterns in real life, you can understand how they project to the charts, and that helps create probabilities and edges in the market. And we also talk about how Darren discovered the cipher pattern. So if you guys haven't heard that story, it's a great story because he didn't go out looking for it. It was something he found by accident, and then kind of followed up on it. So check out that podcast coming out next week, Discovering the Cipher and Human Behavior Patterns. Let's go on to our next pair, which is going to be silver. Silver here on the daily. This is going to be a breakout situation. Obviously, you can see that we broke out of our previous structure highs right here. If you look left, you'll remember that we were trading at previous structure highs as well. So I expect a higher move from silver. Where do I expect that higher move to come to? Well, looking at this zone right in here. So think about 1845s up to about 19 even. If we take a Fibonacci extension from our previous swing low to swing high right here, we'll get some Fibonacci confluence up at that level 2 as a 127 extension. So a decent opportunity to buy silver here. If we go down to, we saw the same thing on gold actually. Well, similar. We had that Gartley that formed after the breakout on gold as well. If we go down to the 4-hour time frame here on silver, looking at this as a traditional pullback trade, right? So you have your previous level of resistance, which once was broken should now be expected. Doesn't mean it has to, but expected to act as support. Look for a pullback. Look for an opportunity to buy it up into that level. Can get a really good risk reward out of this, depending on obviously your entry technique and the length of that pullback. But certainly look for a little bit of relief after the breakout, little profit taking. Once that relief comes, see if you can get involved on the second wave higher here on silver dollar. Last thing we're going to look at here is going to be oil, West Texas oil. This is going to be similar to silver dollar, where we just broke out of our previous structure highs here. If I go ahead and draw a line in the sand, you'll see a higher high, higher close right there. Expectation is that we're going to continue higher, probably to about the $33 level. So if we go down to a 4-hour, same thing. And we've been consistently doing this pattern. This is why we've loved oil for a few months now, but we had our consolidation here. We broke out. We've just been looking for retest, higher high, retest, right? Got an equal high right there. Another breakout pattern. Boom, broke out to the upside. So same thing. Previous structure resistance. Look for it to act as support. I would look for a retest back down into our 2860s. Oops, sorry about that. Meant to be a box. Back down into our 2860s to about 2715 level. Look for a buying opportunity there. And again, we can look to trade this up to about $33 even here on oil. All right, so that's it for this week, guys. I told you short and sweet. There wasn't really too much in the market to talk about this week, but I didn't want to go a week without giving you guys a video since I know this is the highlight of many of your weekends. Hopefully, we'll be back to normal next week, not just in the live room, but back in the weekend video with some more trading opportunities on the radar. But understand this is what happens. We talked earlier about how Thursday was a very busy day. Things take time to develop in the market, right? Whether it's advanced pattern formations, whether it's breakout patterns. So whenever you're coming off a busy period, expect a slower period, right? Because things need to set up and before they complete again. And those slower periods could be some of the trickiest times in the market for traders, especially as we come into the summer months, which are typically the slower months of trading. And I say that because many of us feel this need to trade. We have to be in a position at all times, and it feels good to trade, right? We're not traders unless we're trading. And when you get these slow periods of time, the market tries to bait you into doing something you shouldn't. It baits you into maybe wanting to take a position that you shouldn't be taking. It baits you into, shooting for longer targets because you want to maintain that feel that you're involved in the market. And those are the times where many traders get buried. So my advice is, don't fall for the trap. Obviously, stick to your plan. But if you find yourself struggling to stay out of the market, go to demo, right? Go to demo. We spoke about it in the live room this week. You can catch the recording. But start reviewing your perfect trades. What I mean by that is going through a historical price chart. I do it every day, looking to go through the previous day or the previous session, I should say. Go through a historical price chart, bar tick replay, go through it one bar at a time and pretend you're trading, right? Pretend you're doing something. Look for your perfect setups, and just it gives you a reason to, maybe you're not actively involved in a trade, but it kind of still feeds that need of looking at an active market. So try that out, or just use your time wisely with something else. Back test, learn, something of that sort. So hope you guys enjoy your weekend. As always, it'd be a big help if you guys can hit that like button on your way out. Continue to leave me comments. I got some really good comments after last week's video that are going to end up being podcast episodes, so I'm excited about that. And then aside from that, stay safe, and I'll see you guys next week. Tier 1 members, I'll see you guys on Monday in our Q&A.